Welcome to Mr. Biz Radio, biz talk for biz owners. If you're ready to stop faking the funk and take your business onward and upward, this show is for you. And now, here's Mr. Biz, Ken Wentworth.
All right, welcome to a special episode of Mr. Biz Radio. Me, Mr. Biz, Ken Wentworth. You are stuck with me for this one, but this is every year this gets anticipated. This is my preview of 2025. Where are we going here? 2025 special edition, right? I like that. Got this. I got a nice top hat to go with my prom outfit, as producer Alan said. But we're going to talk about what I expect in the economy and things that are going to impact business owners going into and for the year 2025. So I'm going to be referring. I got a lot of notes here. Did a bunch of projections and things like that for this, so I'll be referring to this often. But to give you an idea what we're going to cover today, we're going to talk about inflation. What's inflation going to do for this year? Interest rates, unemployment, what to expect from unemployment. Obviously, business owners want to know about that. What the heck's going on there? Supply chain. Not a whole lot to talk about there, but a few things I do want to mention that are important. The stock market, and for this year, we've not done this before on these year-in or year forward, I guess, projection shows. Talking about the crypto market a little bit because it's becoming increasingly adopted by folks, governments. People are starting to use it in a lot of different financial transactions. So I wanted to come on and give a sort of projection of some of those things. So with that being said, let's dive in. Let's figure this out. Okay, inflation. So got that out of the way. What do I think is going to happen for inflation? So what I expect to see is throughout the year, we're going to see a steady drop in inflation. Now, before we get into all of this stuff, I did want to actually preface some of this stuff with the political side of these things, right? I can tell you that while there's a lot of rhetoric that goes around, generally speaking, the economy and some of these things that we're going to talk about, inflation, interest rates, et cetera, unemployment, there's not a massive difference between who's in power. And the other thing, which party is in power. Sometimes there are, right? There's anomalies out there. And it also really depends. It's highly dependent. It's difficult to just look at it and say, well, if there's a Republican in the White House, then it means this, because obviously if there's a Republican in the White House as president, but it's a Democratic Senate and Congress, Senate and House, then you're going to have problems getting anything done. So it's difficult to say, oh, well, a Republican president means this and a Democrat president means that, because if they don't have control and they can't get things through, it's difficult for them to make significant impact over their 4-year term or 2 years actually into it as midterm elections and things like that go. So I wanted to preface that and get that out of the way. I will say this much. So here in the U.S., we obviously have known for a couple of months now who the incoming president is. We know it's going to be a Republican, Donald Trump. We also know that the Republicans control the House and the Senate. Now, you could say, oh my gosh, people that are very bullish on Republican fiscal policy, I happen to be one of those people, by the way, are probably pretty excited about that. Keep in mind, though, because we've known for 2 months that this is coming, a lot of these things have already been considered and sort of, especially like in the stock market, in the crypto market, have been priced in, so to speak, because we're anticipating the changes that are coming, always sort of staying out in front of that. That said, so back to inflation. A lot of different things that I expect to happen. Generally speaking, I think that we're going to see in the first quarter, it's going to remain elevated a bit, but it's going to show some signs of sort of moderation, right? Especially as Trump gets in and starts to do some things. Now, it's going to take a while to do that. And again, I'm just talking about the first quarter at this point. Some of the supply chain disruptions, I think, are going to ease, which is going to help that as well, to help drive down inflation just a hair. And then continued improvement with stabilized commodity prices. That's what I expect to happen in the first quarter. So really, I expect it to start out at 3.8% or so and drop to around maybe 3.6. So go down about 20 basis points during the quarter. Second quarter, I think we'll start to see a more of an impact, lower energy cost, give it a little bit of a slight reduction in inflation. Some of the core sectors, I expect they're going to show more consistent pricing because, again, they're starting to price in some of these things that they've expected coming and then will be coming. And I think that'll, the Federal Reserve policies, that's going to help maintain sort of the downward pressure on inflation. So I expect, April, May, June, we're going to be in a 3.5, maybe drop into 3.44. Look at that, easy for me to say, 3.4% range, somewhere in there. As we get into the third quarter, we're going to see sort of a lot of the same things. Some seasonal adjustments, of course, as we get into July, and that's going to help some reductions. I expect to see some global trade improvements. And then finally, I think, inflation is going to start as we get to the end of that third quarter, really start to get to pre-pandemic levels. And so I expect us to start in the 3.3% range and end in about 3.1%. So again, a steady decline throughout the year. Fourth quarter, I expect, again, a lot of the same things. Some of the year-end trends, I think, are going to show consistent progress in inflation control, again, with some of the Fed Reserve policies. And it's going to conclude the year kind of in the Federal Reserve's target range. And I think we're going to end the year at about 3%. Summarizing, starting at about 3.8% in January. And I think by the time we get to the end of the year in December, we're going to end at about 3% with a steady sort of, just really small increments, changes throughout the year of, roughly 0.1% or so, 10 basis points per month as we get closer and closer towards the end of the year. Interest rates. So keep in mind, so the FOMC, the Federal Open Market Committee, they meet about every 6 weeks during the year. They're the ones that control the Fed rates, which in turn, obviously, the interest rates. When people talk about interest rates, they're typically talking about the Federal Reserve interest rate that they set. And I expect there's not going to be a whole lot of movement during the year. So again, going back to FOMC, they have two main goals when they change interest rates, if they move them up or down. Their two main goals are to have maximum employment, so obviously reducing unemployment, and then also stable prices. Now, they sort of view stable prices as having inflation somewhere in a 2% range. They say 2%. I think that's kind of what's really, they say. I think they've kind of inched that up a little bit over the last several years. They still state it as a 2% goal, but I think, like I said, I think we're going to end the year around 3% and kind of getting in that range, what they're looking for. But so in summary, I don't think there's going to be a whole lot of changes. As I said, I think we're going to stay steady. First 6 months of the year, I don't anticipate any changes. I don't think the federal FOMC is going to do anything. I think they'll remain steady because we're going to see, they'll be focused on the inflation control. And again, as inflation is coming down, they're going to say, we don't want to change anything and upset the apple cart there. So I think they're going to remain steady. And I think as we get towards quarter three is when we'll start to see further easing. So I think we'll see a 25 basis point drop in quarter three and another 25 basis point drop in quarter four. So meaning we're going to go from start the year at 4.5%. We'll go to 4.25% in the third quarter. And then in the fourth quarter, we'll end the year at about 4% as their interest rates. And again, that's going to drive everything as we go through, everything as other interest rates, credit card interest rates, mortgage rates, all those sort of things. They're all domino effects from what the FOMC does in their meetings. Again, they meet about every 6 weeks or so. And so that's what I expect to happen with inflation, interest rates. We're going to hit a break here and come back, and we're going to jump into the unemployment rates, what I expect to see from those. Supply chain, probably get through those two. And then, again, we still have stock market and crypto market to talk about as well. So we'll do that if we come back after the break. Don't forget to subscribe to the YouTube channel, Mr. Biz. You can find me there, obviously. Come back after the break, and we're going to dive back into 2025.
If you would like to reach hundreds of thousands of business owners every week, Mr. Biz Radio can help. Our show airs globally 7 days a week for more than 25 hours across several internet radio stations, plus 20 plus podcast platforms. Also, video exposure on the new exclusive Mr. Biz Network streaming channel, which gets blasted to 100 plus streaming platforms, and the Mr. Biz YouTube channel, and our 350,000 social media followers multiple times every week. Join Mr. Biz Nation as an advertiser by emailing us at info@MrBizSolutions.com.
Attention, Mr. Biz Nation. We have an exclusive offer just for you. Get lifetime access to scarcity countdown timers and logic links for only $69. Yes, you heard it right. Only $69. These tools will add urgency to your email campaigns and website pages, helping you increase conversions, sales, and capture more leads. Don't miss this incredible opportunity. Visit GetPulseTools.com now and take your business to new heights.
Check out all 3 of Mr. Biz's best-selling books at MrBizBooks.com. Now, once again, here's Mr. Biz.
All right, welcome back, show. Again, talking about my projections for 2025. I got so fired up and so heated, I had to take the top hat off. Plus, I look like a clown. I still kind of look like a clown with these goofy glasses. But nonetheless, I want to stay in the spirit here. Stay in the spirit. Where did we leave off? So unemployment. What do I expect for unemployment? Really, I expect there's a whole litany of things that are going to move around, but I really expect unemployment to stay steady throughout the year. We're at about 4.2%. I think we're going to stay at 4.2%. I think we're going to see things change a little bit. So especially as we get into, we'll have some seasonal adjustments. Typically those happen in March or so. And then also in July, they go in different directions, right? So usually in March, the seasonal adjustment is an uptick a little bit. So we might go up into the 4.3% range, maybe 4.4, but I think probably more like 4.3. I think we'll drop back down as we get into the May, June timeframe and stay steady at that 4.2. Again, the seasonal adjustment that happens typically in July for summer and things like that, that usually has a positive impact on unemployment. So again, I think we can tick down maybe 10 basis points or so, get down in that 4.1% range, and maybe a slight adjustment as we get into sort of the late third, early fourth quarter, maybe jumps back up another 10 basis points or so. So again, we stay at about that 4.2%. So really with some slight adjustments and some slight ups and downs throughout the year, I expect that we're still going to remain pretty steady at that 4.2%. Now, that's extremely important to consider as you have open jobs now, as you may be looking to grow your business, as you get into 2025 and you're going to be looking for additional people, is how to approach that, right? So if unemployment's going to stay sort of steady, what approaches can you change to be able to attract better candidates, be able to hire people faster, get better people faster? I talk about a lot of that stuff in one of my books, Pathway to Profits, of different ways and innovative ways to attract good people. So I've been hearing from a lot of business owners, especially as unemployment's been pretty challenging here over the last several years, a few years at least, that it's difficult to find good people, and you might get, a whole bunch of applicants, and most of them are just completely not qualified or just very poor applicants. There's good applicants out there, I promise you. So there's a lot of different things you can do to attract a better pool, so you're not wasting your time interviewing 20 people to find one decent person. There's a lot of different ways to do that. Again, I talk about it in the book, but just a couple quick things is make sure your job description is very, very crisp, very transparent. Don't just put all the rosy things that are in there. And don't be afraid to do 2 things. Not just don't be afraid. I would encourage you to do 2 things. Number one, make sure that you write the job description and put deal breakers in there. Don't be afraid to put it in a job description. It's a little bit, unorthodox, but don't be afraid to put in there, if you can't tick off these boxes, boom, 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 don't bother applying. Word a little nicer than that, right? But you can put that at the beginning of the job description. That way people see it and go, oh, well, I don't have that experience, or I can't do that, or I can't lift 50 pounds, or whatever it might be that would be a deal breaker for you. That's going to help you get better candidates. The other thing I encourage people to do and recommend is think about, again, what you don't want in an applicant, and write your job description, obviously, the opposite way. So that way, again, you're really refining the language and put some of those deal breaker things and things that are critically important to attract good employees, or good candidates, I should say, at the very beginning. Because nowadays, with everything online, a lot of people see they're looking for a specific job title, right? So I don't know, a financial analyst, and they just see you have a financial analyst job open, so they click apply. They don't even read the whole thing or whatever, but I would put, in the very beginning of the job description before you get into some of the details of the position. And that'll help you get a better pool of people. So again, you're not going through and interviewing a bunch of people to find one good person. And don't be afraid to do some pre-screening. There's a ton of different pre-screening tests that you can send via email that are very inexpensive, that can maybe help, again, eliminate people before you even talk to them. Get someone who applies. If they make it through your initial filter, send them some sort of assessment online that you can do to say, okay, well, I'm going to eliminate everyone who doesn't score above, 85 on this particular thing. So that's another thing. So again, it's sort of not 2025 projection, but something I think that is very important as people were struggling with finding people, and as unemployment continues to drop, or not kind of remain steady, as I said, but still remain at relatively low levels, it's going to become increasingly difficult, which, again, another thing you can do, forget about thinking about unemployment and finding good people, focus on retaining your people. And then you don't have to worry as much, unless you're growing, of course, but you don't have to worry as much about replacing people constantly. So really look at maybe some new programs you can implement, so you have less turnover, so you're not having to go through that whole process and not even have to face the difficulty of finding good people with, relatively low unemployment numbers. Okay, so supply chain challenges. So I wanted to mention some of this because I think it's kind of important. I expect that they're going to face, kind of some of the ongoing challenges because of sort of the geopolitical tensions that are going on. Potential policy change with the new administration. You may see some disruptions. As you know, Trump can be a little bit aggressive, let's say, with things. And, him coming out recently and saying, we're going to rename the Panama Canal. And Panama Canal has a major impact on the global supply chain, of course. Especially in the Panama Canal, you may continue to see some of the headbutting down there between specifically China and the U.S., but also other countries, but primarily the U.S. and China, because there's a lot of things that come from China through the Panama Canal. And if Trump decides to get very aggressive with them, like he's talking about, as an example on the tariffs and increasing tariffs, to significantly higher than what they are even now, you could see some more tension there and potential, again, disruptions in that. The whole issue in the Suez Canal, I don't see that getting a whole lot better, frankly, anytime soon. I think, if anything, there could be some possibilities there that it could get better, because I think Trump will be a little more aggressive and maybe have some more military presence there. And what I'm talking about specifically is all the pirating that goes on in the Suez Canal. And, if you think about the map, if you look at a world map, if you don't go through the Suez Canal, you have to go all the way down around Africa. It adds a significant, I forget how, someone estimated how many days it takes for a ship, as opposed to going through Suez Canal and actually going all the way down around. And then I want to say it was 20 some days. I may be wrong on that, though. The other thing that's significant is now there's pirating going on down around the southern tip of Africa, because the pirates know that, okay, if you're going to avoid the Suez Canal, all right, we're going to put some guys down, at the bottom of Africa, because you got to go here or you got to go there, and they probably have people in both places for pirating. Now, again, Trump could get very aggressive with that, maybe take some military action. That may, again, have some geopolitical impacts. It may stop the pirating, but it also may cause some tension, geopolitical tension, which could mean a lot of different things that could, again, cause further disruptions in that supply chain. So primary thing that I would say is really work on, if you do shipping, is to look at what you have that comes through the Panama Canal and or the Suez and in that area, and develop some alternatives. So just in case, worst case scenario, one of those gets just completely shut down, it doesn't shut down your business. Your alternative may be something that's 20% more expensive, but if you got to keep the doors open, you may have to pass some or all of that on to your customers. But you have to have an option, right? You can't just have no option and, now I can't get my materials and now I'm out of business. So something to think about, and you should have been thinking about it before, but if you haven't already, really think about developing some of those alternatives. All right, we're going to come back. Last segment, we're going to talk stock market and the crypto market.
How would you like to have direct access to Mr. Biz to help you run your business more profitably and more efficiently? At MrBizSolutions.com, you get live access to not only Mr. Biz, but also several of his hand-picked and trusted business experts, each with 20 plus years of experience to help you optimally manage and grow your business. That's just the start of where Mr. Biz Solutions begins. Learn more at MrBizSolutions.com. That's MrBizSolutions.com.
Attention, Mr. Biz Nation. We have an exclusive offer just for you. Get lifetime access to scarcity countdown timers and logic links for only $69. Yes, you heard it right. Only $69. These tools will add urgency to your email campaigns and website pages, helping you increase conversions, sales, and capture more leads. Don't miss this incredible opportunity. Visit getpulsetools.com now and take your business to new heights.
Got a question for Mr. Biz you want answered on air? Email it to info@MrBizSolutions.com. Now, once again, here's Mr. Biz.
All right, welcome back to the show. And shed the glasses, so I look less clown-like. I look a little bit more like producer Alan said. I'm heading to the prom. I'm heading to the prom here. So I want to talk about stock market and the crypto market. And this is sort of especially on the political side of things, can be a little bit divisive as well, because people have, again, as I mentioned at the outset of the show, some certain assumptions that they make based on what political parties in power. And I can tell you that, it's funny, you hear a lot of the hyperbole from Trump, and he talks about, the greatest stock market and things like that. Excuse me. Of course, the president and Congress and Senate and House can have some impact on the stock market, but the things are such a, generally speaking, a much more macro level that saying that because this person was president, instead of the market going down 10%, it went up 20, 30% swing, is probably not going to have that much of an impact. However, it can have an impact, and some of my projections here are based on the first 4 years that Trump was in office. And, his pro-business policies. The stock market loves that. I mean, absolutely loves that. It's also interesting, I should mention from a political standpoint, that, Trump and Biden were trumpeting these massive returns and things like that. And, as you remember, when COVID hit, the stock market took a massive hit. Now, it gained it back within a couple of months. And so, you take that just in a very thing, and you can say, well, oh my gosh, I returned, 25% in the stock market in only 3 months or whatever. Yes, but there was a massive global pandemic event that caused the thing. It was just rewriting the ship and getting back to sort of normal and where it was. So it's a little bit misleading to think that way. And likewise, Biden had some similar things where he was pointing out that these massive returns, and the stock market, frankly, has done well under Biden. I think some of that was just happenstance and the way things have been going, but just kind of worth mentioning. I know some people think like, oh my gosh, if there's a Republican president, stock market's going to go up at least 20% a year, and if it's a Democrat, it's going to go down 10% or whatever. Not necessarily true. And again, some of the reasons I mentioned earlier it depends on who's in charge and running the Senate and the House. To be able to put some of those, pro-business policies through. That being said, I'm very excited about Doge and with Doge with Elon Musk and Vivek Ramaswamy. That's presuming that Vivek, J.D. Vance now, who's going to be the vice president, was a senator in Ohio. His seat is open, and there's a lot of rumors that the governor of Ohio, Mike DeWine, is looking to replace J.D. Vance with potentially Vivek Ramaswamy. And supposedly, what I heard just actually yesterday, is Trump is encouraging Vivek to take that seat. But previously, he had said he wasn't interested in it. So I'll be curious to see how that all plays out. If Vivek stays with Doge and doing that, Department of Government Efficiency, I'm very, very curious to see what they come up with. I think there's going to be some astounding things coming out of that, which will have an impact on the economy and specifically some of these things at stock market. With, think about large companies with defense contracts with the United States that may have been nefarious and way overcharged, and things like that. As they uncover some of those, it could have an impact, especially on, like I said, the defense industry and things like that. So anyway, on to what I expect. So Q1, I think there's going to be a relief rally, I'll call it, and some of that's going to be, I think Treasury yields are going to continue to fall. Again, I think the inflation data is going to be, continue to be a bit favorable, and I think that's going to help a bit. So I expect in the first quarter, gains will be about 5% or so in the market. Again, some of that's the Trump effect, although, like I said before, some of that's already been baked into the stock market and what they expect. As we move into Q2, I think there's going to be some hurdles, again, with some of the things that I mentioned, the trade policies, geopolitical tensions, some of that supply chain that I just talked about. I think there's going to be global growth overall is going to come in it's going to be slower than average. I'm sorry, slower than average or slower than expected. I think, and against that impacts us. I think some sectors like utilities and healthcare are likely to outperform, as they have pretty regularly here over the last couple of years for obvious reasons. But because of that, I think there still will be a positive return in the market, but it won't be significant, maybe just a couple percent, 1 to 3%, somewhere in the 2% range, I should say. Quarter three, I think there's going to be some, you'll see an uptick in the global equity markets a bit, and that's going to help drive growth in the US as well. Emerging markets and hopefully some of that geopolitical tension, expect that to sort of reach a crescendo, and then there'll be some easing. Much like a lot of the things you've seen with Trump, he'll come out with a bombastic, aggressive statement, and there's a reaction, oh my gosh, right? And then cooler heads prevail. And I think he does that on purpose. I think that's almost like a psychological negotiating tactic, to where, you suggest something completely extreme and then you settle on something that's still pretty good, but maybe you wouldn't have gotten there if you wouldn't have started with something so extreme. And I almost think that that's a little bit of a head game that Trump likes to play with some of our other foreign countries. But I think that'll be some. So I think, quarter three will be a little bit better, probably a 4% or so gain. And then as we get into quarter four, I think there could be a little bit of volatility, because at that point in the year, there will have been gains in the stock market. So what can happen, especially with with large investors, is there could be some profit taking. So they say, oh my gosh, I'm sitting on a gain of X%. I'm going to go ahead and sell out of that stock to lock in that gain and not make it just a paper gain, but actually a real gain. So you could have some of that. Again, some of the uncertainties with policy and things like that as we get towards the end of the year. But I think especially corporate earnings, I expect in technology and energy is going to be very significant this year. Again, some of the some of the Trump policies that are pro-technology, pro-energy sectors, I think those will be help those earnings. So I expect, again, will be about a 3%. In the fourth quarter, meaning that for the full year, I expect the stock market to return in 2025 somewhere in the 11 to 15% range. So above the historical average of, I think it's 8.5 to 9% is the historical average. So above average, maybe even up to almost double the average. So that'll be a good thing. Real quick here, I did want to cover a little bit on the crypto side. Crypto, I think, is going to have a fantastic year. We saw the rise, especially after the election results came out, right? Because I think it's expected that Trump will be very pro-crypto, as opposed to, I think, generally speaking, that the Biden administration was neutral to negative on the crypto market. And it seems that Trump is going to be very pro-crypto on that. You've seen that Bitcoin, a lot of the market, but Bitcoin specifically, over 100,000. I expect that's going to continue a meteoric rise. And potentially in this quarter, get up into the 150 to 200,000 per coin range. I think it'll continue to grow as you have institutional investors that are more and more, as there's more coming into this. I think institutional investing is going to drive a lot of that market, as you can imagine, because they have, tens, hundreds of billions of dollars that they can put into the crypto market. And some of their customers are going to want that. Some of their clients are going to want that. Hey, get me into some crypto. I want to put 10% of my portfolio in crypto, and they may have nothing in it now. So I think you'll see more of that as you have institutional adoption and some pro policies. I think there'll be about a 10%. I think you'll see a pretty good uptick, 10% overall. And again, there'll be some fluctuations throughout the quarter. I think about 10%. First quarter, second quarter, I think about 8%. I think specifically Bitcoin and Ethereum are going to sort of stabilize at some pretty high levels during that second quarter. Third quarter, I think, they're going to continue to have investors pivot towards DeFi, decentralized finance platforms. That's going to drive significant growth with those. And regulatory clarity, I expect there'll be more of that. As more countries begin to adopt it, there'll be a little bit more clarity around that. I think will be about a 12% return in quarter three. Finally, we're running out of time here. I think in quarter four, we'll have about a 7% return. I think there could be a little volatility with some of the things I mentioned before, with some profit taking. You had a great year, so you want to take some of those profits. That's what I expect for 2025. Running out of time here. Thanks for watching. Thanks for listening. Have a fantastic rest of your week. And don't forget, cash flow is king.
To become part of Mr. Biz Nation, follow him on all social media platforms or never miss a show by going to MrBizRadio.com. If you prefer free video content, visit the Mr. Biz YouTube channel or check out his streaming channel, which is available on 100 plus streaming platforms at MrBizNetwork.com.